Welcome to Signature Required. It is intended for Tennesseans by Tennesseans.
What makes them tick? What lights their fire?
We're pulling forward people that, unless you listen to this interview, you might not know a thing about them. The heart of a Tennessean, the volunteer state, is serve, and we do so largely without self-promotion.
And these are genuine people that get up every day and want to make art, or want to educate the nations, or want to have a heart of love in a way that makes a difference.
Learn from 50 years of experience, take a nugget away, and then go share it with a friend. Drew DiAgostino, founder and CEO of Crystal. Welcome to Signature Required.
Thanks. I'm happy to be here.
So you're in this cool space of AI, which I feel like that's kind of all you have to say when you introduce yourself. It's kind of like the internet in 1999 when people are like, what do you do? It's like, I'm part of the internet. And not everybody really even knew what that meant in 1999, but all you had to say was just like, I got a website. And that just immediately made you cool. So you're doing stuff in cryptocurrency, Bitcoin, AI. So I feel like you've kind of checked off all the boxes. So what is it that you tell people that you do, unless you just say, just cool tech stuff?
Yeah, I've been trying to figure that out for the last 10 years. When people say, what do I do now? I usually just say, I own a business. And then if they ask more questions,
so you start off cryptic right away. Yeah.
I own a business. And then if they actually want to know, then we'll go deeper. But my actual answer to the question has changed quite a bit because the definition of AI has changed. So I never said AI before. And there was a short window of time when I can legitimately say AI. And now if I say AI, it's like, oh, cool. Another one of these guys that adjusted their LinkedIn profile over the last year. So it depends on the audience, I guess.
All right. Well, for an audience that, let's say, hasn't had the opportunity to hear from someone that really is doing some cool stuff, break it down into a basic level. What are you doing? Because I think it's pretty cool.
Yeah, so when we started 10 years ago, really our main product was a Chrome extension that you could add to LinkedIn. So, and a lot of people still use that. It's still our most popular product, where I'm looking around LinkedIn, there's a Chrome sidebar on there, and it just says, view personality, and it'll analyze on the page all these they're called personality signals.
Oh, wow.
And it'll tell you about the style. So if I'm going through a process of my daily, meetings, whatever, I quickly look up the person. That's kind of where we started. So it's that very accessible data set. And then we realized, okay, this works really well for resumes. So let's make it so you can analyze resumes for like the recruiting use case. And then realized you could start building this data set as long as you could link people's identities. And it works best for like executives and people with significant online presence. But as long as you can find that structured or even unstructured content, like things you've said or historical, like professional experience, or a lot of companies have these big executive bios, stuff like that. If you can find that, aggregate it, and then analyze it, you can build a really accurate data set that is not trying to be perfect, but it's trying to directionally tell you these like behavioral patterns and trends.
Okay, I have to ask the question because the elephant in the room for me is when you were talking to Spencer, you're like, man, it's super creepy that they look at all of your history and try to know that what you're shopping for. How do you creep proof yourself, I guess, in this space where you're not just, I would maybe argue that looking at somebody's behavior online is one thing, but then like trying to get into the depths of their soul and how to best talk to them is another. So how do you manage that?
So having been wrestling with that for a while, I would say there's a couple levels to speak about it. The one, before you talk about any technology or data use, you have to think about at the core, we are two people and we're interacting. Mm-hmm. Does it feel weird for me to be using this tool when I'm interacting with you? Like beyond whatever the technology is doing or you get like really technical with it. I just have a gut check as far as like, I use this for going into meetings. If I'm selling to this person, would I want them to know that I use this? And if the answer is no, it's probably something a little bit creepy about that.
Little conscience check.
Yeah. But if the answer is sure, And in fact, yeah, I want them to, because then they'll know that I'm going out of my way to try to help them have a better experience. Then that passes that test for me personally. So if I'm using any tool, and not just my own, not just Crystal, if I'm using any sales or any software tool, I always want to be using a tool that I'm totally fine with the other person knowing I'm using it. That's kind of my own internal check. It's kind of like a golden rule of like SaaS tools. You only use the data about someone else that you would have them
Use about you.
use about you, something like that. So that's like the philosophical part of it. And then when you get into the technical parts, you just have to think about, all right, if I'm analyzing some information, does the person have a realistic expectation of me using that about them? And generally, if someone's putting a public profile up there, you're expecting Google to be scraping that. You're expecting someone to be, even not technology, but I'm looking at it and I'm making, micro assessments about the person in my head. Like, okay, looks like you're this way. You're communicating. It seems like you've got a good sense of humor because you've written in this way. So it's kind of automating the perception, which to me is just the same thing we do anyway. So that's kind of where I land with it. I don't know if that.
No, I think that's helpful. I think AI, listen, I use it in my daily life. It helps me write. It helps me check my kids' trig homework because I haven't done trigonometry in a really long time. Like, I am an early adapter of AI tools, but I'm always curious, maybe on the surface, right? Like on the very populist viewpoint of like how I could use AI in my life. But as we're starting to really think through in our own ethics and our own thoughts, how far these can go, I do feel that tension. I think a lot of people do. And it's just, I like how you said it's a gut check. It's like, this is the future. How do we use it responsibly? How do I do that in my own life? How do I let my kids use it? Because, today it's like, can I ask AI about this before I write my paper and have it do research for me? It's like, no. But is that what they're going to do someday? So all that to say, I'm wrestling with that tension in my own life. So I'm grateful to know that you are too.
Have you run into any of those things where you tried to use the AI and then you got that weird gut check as far as like, I don't know.
Yeah. I don't know that I want to say it on a podcast like in this moment in time, but if I'm looking at you with authenticity, yes, I have had that moment where I was like, this might be a line that I don't love. And I think I worry too, I looked something up the other day, I was working on a project, how it's getting better and better, but it's not always factual. And I like that it sounds like your product is working with things that individual people have put up on purpose to be analyzed, to be known. And it seems like you're just aggregating that data to make it more usable for people going into a sales situation.
And a key thing, there's this overall AI question. So when it's important to distinct what we're talking about too. So things like, it's called hallucinating when the AI when it makes up something. And these large language models like ChatGPT, they will, more than any person, give you the wrong answer as confidently as possible. So, I mean, it happened to me the other day. One of these moments was for me. I was like, I've been trying to learn about a particular company and is this stock undervalued? Whatever. So I'm like trying to use the AI as my consultant, and I'm giving all these questions like, all right, if my goal is to protect downside in this case, and the stock price is like this, and this is what the assets are, I'm giving it these questions as if it's a person. I'm just testing it out, seeing. And it like gave me these like trading recommendations. I was like, wow, this is cool. I'm going to be like rich. I'm going to throw this pot at it. And then I actually tried to like execute this thing, and I realized, this thing just communicated to me in this way that was extremely confident, except if I actually made the decisions on here, it was gonna like basically immediately lose a ton of money because it sounded so confident in what it was saying, but it factually was just wrong.
Often wrong, but never in doubt is what we say.
Yeah. So these language models do that. Crystal's a little different because we're not based on language models. We are a little old-fashioned in this world in that we use what's called.
I didn't know we were at a place where AI could be old-fashioned. Please enlighten me.
So we use our AI is not even really. I mean, if we were to show you like the technical parts of it, it has nothing to do with current large language model AI. We use what's called Bayesian inference, which is basically statistics and probabilities. So based on the weather over the last 10 years, we've seen that at this day, it's usually cloudy. Therefore, we're going to give you an 85% probability that this day is going to be cloudy this year, that kind of thing. So it's a lot more about just statistical modeling. In our case, it's like, all right, well, I'm looking at Spencer's LinkedIn profile, and it looks like he's interested in golf. And based on these 18,000 other people who we saw fill out our personality tests who are also interested in golf, it looks like this gives him a 71% chance of having a dominant personality trait, you know? So it's kind of like that, where we're just taking all these statistics and projecting them forward. AI today is a little different, where it's more of a black box where you can pass it information and it will just give you an answer, and you don't know how or where it came from. So that's a little bit of a distinction between what we do and what
I might be
ChatGPT.
interfacing with more. Well, and I really
Yeah.
appreciate that distinction because AI feels like it's such an umbrella word, like the World Wide Web, right? And understanding we're going to all have to get much more comfortable with the nuances of what the various technologies are. And gosh, if it spits out good stats and data, that's like your heart language, babe.
Yeah, I think it's part of what I take away from it is we've always known that anything that goes out on the internet is there forever. And that has to be the guiding principle for AI and any interaction, is that if it's out there, then it's out there, and it's fair game. And we may not like that it's fair game, or we may not feel like that the boundary line is being respected through the development. But I think it's just an important reminder as we, are teaching our kids and just mindful of ourselves. It's like, you put that post out there, you post that amazing meme. That meme was funny in 2010. It wasn't funny in 2025, right? I mean, there's stuff like that it's like people have something that 20 years ago looked different, sounded different, didn't age well. And it's like, wow, you have to be really, really careful, because it was one time where manually we might have to go scrape through someone's profile to say, okay, let me look and see what they were talking about 10 years ago. But we do that just in a way that's not very technology forward. But now we've got really powerful AI that can go through and in half of 1 millisecond, look at everything that you've ever posted and draw statistical conclusions about who you are. And that's something to be reckoned with.
Very much.
Yeah.
And you always see the top of that with famous people.
Yes.
Because, and it feels like a celebrity problem. Because, all right, that's got a ton of information. So the AI is going to say this thing about Donald Trump or Elon Musk, people who have a ton of information out there and it's used. But the crazy thing is, what you're saying is that all of us already have this public footprint.
Big time.
So
way more than we think.
Yeah. So to the AI, it doesn't matter who we are. It's training on all of it, sucking it all up. So that's where you really need to be, aware and careful.
Yeah.
Because I mean, we're only in the first inning of all this stuff.
Yeah.
So the AI is only bound to the data that it's trained on. If it doesn't have access to that publicly available data, then it doesn't know anything about that. So we all have that opportunity to inform it what we want to.
So is we're talking to the next generation of kids that are growing up in a world of tech, AI, and have an interest in saying, hey, I want to be proficient in this. I see that this is the direction the economy is going. The amount of money that is being paid to people that are skilled in AI is similar to what engineers and programmers were making a generation ago. So I always look at somebody like you, Drew, and say, I would have no freaking clue where to begin on anything related to AI. I'm not a programmer. I'm not really a tech guy too much. So if you're talking to people that see that AI is the future, like they're listening in and they can say, all right, 10 years from now, is AI going to be more a part of our life or less a part of our life? I think the majority of people will say, whether I like it or not, it's going to be more a part of our life. And I want to know how I can participate in it, how I can benefit from it. How would you counsel people? Because I could make up stuff of like, start go in towards programming
Yeah.
or start, but I wouldn't even really know where to begin.
Yeah.
So teach us how to follow in your footsteps if someone wants to go that direction.
Well, I'll start off by saying everybody, like, I am figuring this out just as much as anybody else is. I can tell you the principles that I'm building Crystal on, and I think those principles, I've tried to align myself personally with them, and I think they also could apply to just building a career, especially if you're a young person trying to figure out where do I invest my time.
Yeah.
Like, especially if you're looking at all the disruption, like are these jobs even going to be jobs anymore?
For sure.
Rapidly, I just saw a tweet about how Y Combinator is putting, they put out this call for startups, and most of the things that they're trying to focus on building are these like $100,000 or more jobs just to be completely automated away. So it's all these big questions like, will this actually be there?
Yeah, because you think about like lawyers right now and saying, there's a lot of billable hours that are going to go away because AI is going to be a really proficient writer. It already is. And so you see all those spaces, and AI, despite being very different each day, I think we still can get to the core principle that it's going to be more, not less in 10 years. So how do we get more educated, and how would you direct youth in saying, all right, I want to be a part of this?
I'm building my company on these 3 pillars: AI, EQ, and BTC. That's kind of how I think about the first principles of Crystal.
All right, so diagnose what all those acronyms are.
So AI, we've been talking about it. And the reason why we are heavily investing in it is because I view AI as it's where our P&L growth comes from. So our profit and loss, and where our business growth is going to come from. I mean, we play in this narrow space, but literally every industry, you have the ability to take tons of manual or tons of work that's being done in an inefficient way right now and use AI to make it more efficient, and then probably to multiply what you're doing. So there's immense scale and efficiency and accuracy that can come from using AI well.
So are you a programmer? Like, can you program in it? Or is it like I outsource and I depend upon people that are experts in that space? I'm a business leader, but I don't take the time to know the guts of it.
Well, I am a programmer.
Okay.
I built the first few versions of our product, but now you truly do not need to be a programmer to use AI. In fact, being a programmer, I'm finding might actually be a little bit, trying to think of a good metaphor for it. You can get in your own way because you're used to needing to do something from scratch. Therefore, I'm going to try to do this on my own.
Yeah.
Meanwhile, someone who's not a programmer stepping in can actually often move faster because they're not even tempted.
They don't even know what they don't know per se.
It's like a football player trying to transition to a coach, is that rarely have our best coaches of football ever played a down of football themselves, which is a really bizarre thing. You would think that the best coaches would come from the best players. Oftentimes it's the opposite.
Yeah, exactly. That's kind of what it's like. So I'm finding that people building products right now super fast, they're not programmers. They're just using the AI and asking it questions, saying, how do I do this? And then they're just so I think if you're someone that first leg of it, I've been trying to train myself to do that too, and like getting very, very good at asking questions, but not going in with answers. I think that's this key with AI. We are all now prompting these tools. So the way that applies in my business is that everything I do as like a CEO, which, as you know, there's just a ton of laundry list of different jobs that come up, and some of those are people-oriented things, some of them are communication, some of them are technical, whatever they are. I'm kind of bringing that to the AI, and I'm finding that sometimes this actually really helps me and allows it to scale. Sometimes it doesn't, and I realize, okay, this is probably not the best use for it. But I think that applies in every industry, especially, obviously, ours. So I think AI is that kind of first pillar, getting very good at using it, and I think that is going to be ultimately, as we're seeing even this weekend with the release of DeepSeek and how these models have all they're starting to become commodities.
And for those that haven't heard, so DeepSeek is a Chinese released product for artificial intelligence that basically has turned the entire technological world upside down. NVIDIA, one of the chip manufacturers that makes chips for artificial intelligence to run, kind of the computer guts, when DeepSeek was announced, they had the largest drop in their stock price in the history of the U.S. stock market.
Yeah, not just
this
their
week.
stock price, any company's
Any
stock
company
price.
ever in the history of the stock market, they declined the most in a single day because of what this Chinese firm had released in DeepSeek, which was basically, we can do this artificial intelligence, but we can do it with a fraction of the computing chips that were thought to be required. And obviously that was not what NVIDIA wants to hear. As a manufacturer of computer chips, they like AI to consume lots of computer chips. So anyway, I just wanted to give the context for DeepSeek.
That's it. And with that, now regardless of what happens with DeepSeek specifically, it's kind of showing you the pattern that this is going to follow. Where right now, these AI models are very expensive to train. They're really big and they require these massive data centers. This is all going to be a race to zero, where we're getting smarter and smarter, and everybody ultimately has access to these models. So as an individual, what do you do with that? You just, I believe, start understanding. I think you need to understand your world well and think about it on a little bit more critically. Like, all right, well, this is clearly a market need because I'm doing this. Say I'm a lawyer in this area. I have an opportunity, and I'm not a lawyer, but I could freak out about it and think, oh gosh, this AI is going to take my job because I'm spending all my time doing this thing that an AI can do better than me, and get paralyzed by it. Or I could be that forward-thinking lawyer in that field who's then basically working with it and experimenting and just playing around, not fully like delegating my tasks immediately, but playing around and seeing, where can this make me better? Where can I automate things? Where can I scale things to do 10 or 100 times more work output? So I think that's how that's how I would move forward with it if I was in that role. So that's the AI part, and that's our P&L. EQ is kind of this, what I was talking about with our product. Now that's where we actually bring differentiation and value to the market.
And by EQ, you mean emotional?
Like emotional intelligence. Yeah. It's really interesting that as AI swallows up more and more and more tasks, and we have these questions, even think back in like that legal example, ultimately, most of the things that AI are going to be able to do and take up are things that humans are doing right now. And we're just doing it a little worse than computers because we have a computer in our brain. But there are certain things that AI will never be able to do. And those, we kind of call them soft skills. But I think the soft skills are actually the ones that are hardest for AI to replicate. So if we've always kind of thought of it as like, oh, that's a nice to have. But like, you really want to go into a STEM field because you want to have this like hard skill. It's weird how it's almost flipping.
It's
where
like the pendulum's coming back.
Yeah, so
it is interesting because you do say, is it safer for me to be a plumber, right? Because like, how much is AI going to be able to turn a wrench and fix a leak at 2 a.m. in the morning versus how would AI do as a psychiatrist to sit down and connect with someone on a human level and an emotional level? It's like two opposite ends of the spectrum. And I think you could make a pretty compelling argument for either side about how it is. But like, just as another example that, Carly and I are in major danger of AI replacing us, because you can load up ChatGPT and say, here is a book. I want you to condense the lessons that I should take this book into a 10-minute podcast. I want there to be a male voice and a female voice, and I want it to be kind of funny. It will literally, in a couple seconds, create a podcast that you can listen to with an audible voice, male and female, that's a little bit funny. And it's like...
That's not funny.
I know, it's not
like,
funny.
I don't find that funny at all.
Yeah, it's exactly right. It's like, that was... not very entertaining at all, ChatGPT. So any case, I just wanted us to take us down that rabbit hole for a second, that it is this, do we want to be that soft skill? Do we want to be the plumber? I think
the answer is yes and.
Yeah, it very
honestly.
well could be. It might be like the end of the bell curve of saying we need to live out in the edges versus some of the things where we can see pretty clearly, like this is in the crosshairs of AI.
Yeah, there's a lot of angles to it. I think what I would, maybe I would loosely say I use EQ because it's kind of that's our field. We're talking about like understanding personality and nuance and these things that computers really have trouble with. But maybe more broadly, it's just the things that humans will always, or for the foreseeable future, will be able to do better than computers. So there's a bucket of those. Some of them might be the soft skills and like interactions. Some of them might be the fact that an AI is going to have a lot of trouble going into a crawl space and replacing a water heater.
Yeah.
So I think there's a big group of that of those things that can kind of fall into that second bucket or that second pillar. And I call it EQ. We could call it something else. But those things are going to. Jeff Bezos has a really good. I don't know if it's a quote. I would butcher it if it was a quote. But he was he was in an interview, and he said that people spend a lot of time, or entrepreneurs spend a lot of time thinking about what's going to change. Everyone always wants to know, oh, how's the future going to be different? And he said, we actually at Amazon think a lot about what's going to stay the same, because we want to build our business and anchor to that. So he always talks about that. Customers are always going to want lower prices. Customers are always going to want, faster delivery.
Sounds like how Warren Buffett invests. He's like, Warren Buffett has become one of the wealthiest human beings to ever walk the planet, because he's like, you know what? People liked Coca-Cola 50 years ago, and they still like Coca-Cola today. And, they like cheeseburgers then, they like cheeseburgers now. He invested in rails. Right? I mean, railway, that is from a long ago generation. And it is interesting. And that I love that quote, because it really does turn conventional wisdom upside down, that rather than trying to be on the next rocket ship, it's like, what's been actually very successful for decades and decades and decades? You just want to be more on the Coca-Cola side and less on the payphone side.
Yeah, definitely.
So don't get it wrong, but you can see which ones have been producing over time.
and that's like, I didn't do this on purpose, but that's a great transition to the third pillar, which is BTC, Bitcoin, because I think the result of all of this is we are going to be living through a very deflationary period. And by that, I mean you will get more and more and more value for less and less input, especially as AI starts taking over other areas.
So break that down, because I think if you would have asked anybody, they would say, we are going to live through a very inflationary period. That's what people, I think, would say, is that cost of everything is going up and my money feels worth less. So that is textbook inflation. So you're saying we're about to go through and live through a very deflationary period. And so to give that one more time and walk us through that.
It's hard. So I didn't make up this concept. There's a
you're in it now, Drew.
You made it up.
So there's a guy named
pillar.
So there's a guy named Jeff Booth who wrote a great book called The Price of Tomorrow, and it's all about deflation. And the main idea here is that technology is in this very deflationary cycle, where if you think about anything that has been that started analog and has been made digital, has gotten much, much, much cheaper. Look at the calculator example is great. When I was in high school, which was like, I don't know, 2003, 2004, like I got those big Texas
the
Instruments
fancy
calculators. One. Yeah, it cost like $100, and you had to have that in math class.
Like
and
the TI-86.
Yeah. And that was what calculators were. And you had
it's what brought us together. Our origin story for another time, but our origin story revolves around TI-86. So, not kidding. Continue.
Oh man, this is where you got to cut out.
Super nerds. Yeah, continue.
So if you think about what that was and what it cost, and over a very short period of time, there's a bunch of steps in between. But now ultimately, that's just on your phone. Everything that the TI-86 could do, and then more is just on your phone. So that was deflation, because we used to have to spend what it was $100 or $200 on that big calculator, and now everybody just has it included. So it's essentially free with your phone. And you can look at any area that has been kind of like analog and then made digital. That is continuing, and AI is going to accelerate that drastically. If we apply it in something like healthcare, biggest cost in our country, we're starting to see AI being able to do better than doctors at detecting certain conditions and stuff like that. So think about this requires an hour of a doctor's time versus a few seconds of an AI's time. It doesn't have that kind of cost. The cost of actually doing these things is coming down drastically. Now, what you're talking about, there's monetary inflation because our entire economic system is built on debt, and if you're a holder of debt, meaning that you have lent someone money, if that money gets less valuable, you're in trouble.
Yeah.
Because all of a sudden they're going to be paying you back with cheaper money.
Yeah.
So that's a really big problem, and our entire system is built on making sure that equation always works, so that credit can be created, people take out the loans, economic growth can be created, and they can pay back the money, and then we can keep this cycle going. So you have these competing forces. You have technology deflation. Everything is supposed to be getting cheaper, but a financial system which is built on this like solid foundation of money kind of constantly, the amount of money constantly increasing, because we can't have monetary deflation because that pokes a hole in the whole thing and the whole thing collapses. So we're almost in these like, it's beyond political, it's beyond any real individual's decision. We're just in these forces where the money supply has to keep increasing because the technology is basically forcing it to. These forces are like at odds with each other. So that's
really well explained. That's really well explained.
Well
'cause
articulated.
I think that fries enough brain circuits for 10 minutes of time of like, okay. When you think about deflation, you see it. It's like you can get a 70-inch television for what a 20-inch television cost 10 years ago.
You don't even have to go to Black Friday to do it.
That's right. You don't have to.
You don't have to be in a
rush
mob.
the doors.
Yeah.
Yeah, that's right. You can have it delivered right to your house, and that is a fascinating way of looking at deflation in one side that is pushing against inflation in the monetary side. And so bring that full circle for us, because this was your third pillar, building around Bitcoin. So how does Bitcoin play into the tension of the deflation that you've explained and the monetary system that we have that is historically been inflationary?
Yeah. All right. So I'll just take it back to my business specifically.
Okay.
So the end result of this is that my business runs on a Bitcoin standard, meaning that we pretty much have all of our excess reserves and stuff in Bitcoin, and whenever we have cash flow, instead of storing it in US dollars, we store it in Bitcoin, and that's just how we run the business. That's kind of the end result of this. But I'll tell you, 10 years ago when we started, here's where it really, really hit me and why I decided to do it this way was, even not 10 years ago, but we raised our first round of venture capital back in like 2015. So, oh gosh, that is 10 years ago now. That went fast.
We're aging rapidly.
Yeah. So around that time, a software engineer, annual salary, is about call it $100,000. And that's a lot of the types of people you need to build a software company to hire software engineers. And I'll spare like the actual numbers, just keep it easy numbers. Let's say you raised $1 million in capital and had 100,000. You basically you raised 10 software engineer salaries of money, and that's how it worked. And the whole game of building a software company in an environment with like venture capital like that is you want to try to build a product, bring it to market, sell so that your revenue increases at a greater pace to drive up your company valuation, even if you're losing money, like spending the cash, burning the money, so that the next time when you're out of that money, you can then raise at a higher valuation and then repeat the cycle until you can do that. That's extremely oversimplified.
It's like a bucket of water with a hole at the bottom, and as long as the water coming in the top is coming in faster than it's coming out the bottom, then
Exactly.
it's okay. But as soon as that music stops,
So the
it's all over.
reason to do that is because if the money's cheap, which in that environment it was close to 0% interest rates, it is not worth it to just hold. Let's say you raise $1 million of venture capital, 2015 to 2025. If I was to just hold that $1 million of venture capital, really all I would have gotten was I would have started with $1 million, and now I would have wound up with probably somewhere around maybe $700,000 of purchasing power if I'm lucky. Might be closer to 50, depending on what your expenses are because of inflation. So if I was to just say, you know what, we're not going to hire anybody, we're not going to try to grow this business, we're going to hold $1 million, and it's going to go from $1 million to what would now be technically still $1 million, but probably only like 500,000 in purchasing power. So it would have been completely irrational to hold that money. So my business was incentivized to spend it as fast as possible in order to generate the growth. And that's how the whole tech, like venture capital model works, because the money is not really worth much. It's worth a lot right now. It's worth as much right now as it's ever going to be. Therefore, figure out how to spend it and generate that growth. So that works for some companies. Other companies, you end up crashing and burning because you spend the money, you can't figure it out. And that's just how it. So if you're any venture investor, you're going to be investing like that, expecting 1 out of 10 companies going to be really good. 5 of them are going to be complete failures, and there's going to be 4 that are somewhere in between. They get bought, or they're some other kind of outcome. That's how your entire premise goes.
But that one company, that one success,
makes it all
has
worth
to pay
it.
for all the
Yeah,
failure.
exactly.
That's right.
So that's that model, and we started with that model because we raised venture capital, did this, but then we ran into this. Like it's often called like the Trough of Sorrow, or like where
What a name.
yeah, where
Nobody's putting that on a t-shirt.
That's a good podcast name.
The
Wouldn't it? The
Trough of
Trough
Sorrow.
of Sorrow.
When you start
Yeah.
your podcast, we'll come on and it'll be called the Trough,
the Trough of Sorrow.
I'm totally
Yeah, I
taking
can't wait for
that.
that one.
Yeah.
Yeah.
It needs to also be a song by Marianas Trench.
That could, there's a lot of potential behind that.
Yeah, totally.
Specific.
You gave me some ideas.
Continue.
But so
your memoir.
the Trough of
Sorry.
so the Trough of Sorrow is typically every startup. Well, most startups run into this, where you end up after the initial excitement, initial spike of growth, reality kind of settles in, and you realize like, oh, wait a minute, this is not. We thought everything was going to be, sunshine and rainbows, and then things like customer churn or other issues, they start hitting you. So if you're on a graph, you think the thing's going up and to the right forever, and then all of a sudden you hit this like plateau or a decline. You're like, oh no, we got to actually figure out how to do this. You can't ride in the early excitement anymore. That can last months. It can last years. And every startup goes through that. And really long-term success it depends on how you navigate that period, that trough. Some people can adapt and they can figure out and get back onto sustainable growth. Others, that is the beginning of the end. So when you land in that trough, you have to make decisions that are really, really hard. And that's kind of where entrepreneurs earn their stripes. The beginning is very easy because if you have something that works initially, it's very easy to keep something up for 12 months. Once that second year kicks in, it gets harder. So we entered that phase, and we were in that for a very, very long time. And frankly, I would argue that we haven't really escaped from it because we have not, as a business, had that like rocket ship growth. We're a company that is profitable. We have about 25 employees. We've got a good, mature product suite. We're very proud of what we've built, but we're still only, a fraction of what we thought we were going to be when we eventually raised venture capital. And I had these growth ideas. So it's been a grind, like going back and forth between profitability, trying to figure out, all right, 3 times I've tried to scale the team to get ready for that hyper growth. And 3 times I've had to cut it down and say, we have to start over because I just burned $1 million and this didn't work. Because I had this like expectation of this is the venture model. We need to be, I have this cash, therefore I need to figure out how to spend it to generate growth. Meanwhile, I know what's going on in Bitcoin world because I'm just like a nerd and have been like obsessed with that for a long time. And I kind of always kept that separate from the business until 2020 rolls around, everything happens. And then there was a big sequence of events where like MicroStrategy, big publicly traded company, starts buying Bitcoin. It's hard to ignore. And that's a whole other tangent that I won't go down right now, but that's it's very interesting. The most interesting thing happening in corporate finance right now. And I was faced a couple of years ago with the realization like, okay, if I was just, now back to the original point, if I was just to sit there with $1 million raised in 2015, and rather than say like, okay, this is going to be valueless in a few years or worth less in a few years, I need to spend it as fast as I can. If I was just to stick that in the time into Bitcoin, into this sound, unchangeable money, I mean, that literally would have, if we're measuring by today, it would have gone up about 200 times. It would be $200 million. Now, there's a lot of reasons for that, and a lot of reasons you can't expect that for the 10 years out in the future. But the point is that it actually was the rational decision at that time to store that capital in Bitcoin and to store it in something that wasn't dollars. And any decision I would have made, I don't know what those decisions would have been, but rather than making the decision on the premise that this is basically losing half its value in 10 years, therefore I need to figure out how to spend it now. So I'm going to spend it not recklessly, but I'm going to be spending it aggressively, and because I need to take these home run swings. Rather than doing that, if I knew that every dollar I had was going to be worth $200, or let's say even $100 in those 10 years, but I would be making decisions very differently.
Sure.
Because, I mean, if you think about that now, it's all right, if every dollar I spend now, it's 2025, in 2035, there's a reasonable chance that this dollar is worth 10 or maybe even $100. I really have a high bar to make that decision. And I might make the decision. I might do it, but it's gonna be a lot harder to. So that was the realization for me. It was not about like, oh shoot, I missed out on this opportunity to for these gains, which sure, that's ultimately what it is. But it was really about how I made decisions with the business, and I observed myself burn so much money because the alternative was just leaving it in a dollar that was depreciating anyway. Ever since moving my business to
no, you got
ever since moving to this Bitcoin standard, yes, we've had like an increase in value of our treasury, but the real value in it is that every decision I make as an entrepreneur now is not against a dollar that's getting less valuable. It's against Bitcoin that is getting more valuable. So I still make investments in my business because that's what the business needs to do. But every investment has to meet this bar that's a lot higher. So I find myself making a lot less decisions. And it's a lot more disciplined. It's like self-imposed discipline. But
I think that's what's fun about technology, of just hearing you talk through it is a language in and of itself and a mindset that is really different than how most people look at the world. You know, when you're showing up and working in a job or doing something that is just routine, it's just a entirely different frame of mind versus thinking about these kind of skating to where the puck's going to be. You know, Wayne Gretzky says you don't skate to where the puck is, you skate to where the puck is going to be. And I hear you searching through that as you're looking at how do I allocate the resources? How do I take care of my employees? How do I do these very real things that as one entrepreneur to another, that both of us, all of us, have spent a lot of time in the trough of sorrow. Carly and I have spent a lot of time in the trough of sorrow.
It's like your epitaph.
Yeah. And, it really is like, if I could sing, I feel like it's a hybrid between like, hello, darkness, my old friend. I mean, it's just like right there that you're just one step away from being right back into the trough of sorrow. And I think you do a really good job of authentically talking through that this is hard and it changes, and you can get it right now, but it doesn't mean you're going to have it right tomorrow. And that's what scares me the most about technology, is that you can get something right in some other spaces and you've got a 5 or 10 or 15 year runway of like, okay, I'm pretty safe here. That is not the case, right? That is not the case in technology.
Have 5 or 10 weeks or months instead of years with how rapidly this growth is.
So, Drew, one way that we wrap up each podcast is we give you a short fill-in-the-blank exercise here. So you haven't seen these ahead of time. I give you a very short sentence, and you tell me the first thought that comes to your head that fills in the blank. So just read the question back to me.
Dangerous.
Read the sentence back to me.
That's what makes it fun.
With it filled in, okay? The future of AI, in one word, is blank.
Way to start with an easy one. Just kidding.
Fast.
So read it back to me, so that way we'll cut it.
Right.
So the future of AI in one word is, read it back to me.
The future of AI in one word is fast.
The biggest mistake companies make when approaching AI is blank.
Okay. The biggest mistake companies make when approaching AI is assuming that that's more than one word.
No, you can do that.
No.
Oh, yeah.
Okay.
Go ahead.
The biggest mistake companies make when approaching AI is assuming that AI should only be replacing what people do, and forgetting that AI is going to be able to do things that we don't even fully understand need to be done.
Oh, I like that.
Yeah.
That's stretching the paradigms again of just this can do way more than what you're expecting and what you even realize today. People have learned today that they can recreate our podcast and maybe do it better than what we're
Hush,
doing.
we were gonna cut
Yeah,
that.
that's exactly right. Edit that, Scott, out. All right. Last one. If I had to give one piece of advice to an AI skeptic, it would be blank.
If I had to give one piece of advice to an AI skeptic, it would be buy Bitcoin.
Ah,
Yeah.
okay.
That is not
That's
what I expected
fascinating.
you to say, actually.
Yeah.
Well, because either way this goes, either way this goes, it's going to require a lot of money printing because of the whole deflation part of it that I was talking about before.
Yeah.
Or we're just going to have a lot of economic displacement and crazy things happening where you're going to see companies like Nvidia, it went down 17% in one day because of a small little spook. I mean, we have no idea where to store value. Ultimately, this stuff's going to converge into Bitcoin. So it's the safest place. So if you're a skeptic about AI, or if you're a super AI bull, that's the best place to store value.
Okay, can I add one?
Go ahead.
And I don't know that I'll say it in like Jeopardy. I don't know that I'm going to form the question in the correct way, but what would you then say to somebody who is a skeptic of Bitcoin?
For someone who is a skeptic of Bitcoin, I would say, good. I was too. And most people who own Bitcoin were. So learn about it.
Well said.
Yeah, there's some really, really good, straightforward, simple books. I'll link my favorite Bitcoin book in the show notes. So this is where, Drew, you and I met a number of years ago, and I'm really glad to get to sit down with you now because we've been able to flash forward in our original conversations were around some chips and salsa at a Mexican restaurant, talking about Bitcoin in absolutely what were the trough of sorrows back then. I mean, just really dark days of that. And you were clairvoyant then in having a vision and saying, see it through to the future. And you painted a picture then that is remarkably accurate to what has transpired in the cryptocurrency space today. And so I really appreciate getting to be in your orbit. Thank you for being here today and helping us stretch our minds a little bit and turn us outside in on, deflation and inflation. The mark of someone that understands something well is their ability to be able to take a very complex topic and simplify it. And I think you did an outstanding job of that today. You could have been just a cool guy to show up and be like, I'm in AI, don't need to say anymore, figure it out. I'll see you in 5 years. But we can clearly see your heart posture is one that you have a heart of serving through AI and a respect of we need to be mindful of what this technology is doing. But please, please, please get educated about it. Don't ignore it. Because it's coming for you either way. Thank you for being here, Drew. You did a really good job
Yeah,
today.
thank you.
Yeah, thank both of you. This has been really fun.
Drew DiAgostino, CEO of Crystal, but better understood as AI, statistical model, Bitcoin guy, technology guy. I mean, all of it.
Yeah, I just appreciate y'all letting me get a word in edgewise. That is like all of your heart language in one podcast conversation. That was really fun.
I've known Drew for a number of years, and consistent with a lot of people in the tech space, you just kind of have to give them a little bit of room to roam in the fields. They will oftentimes talk over your head, or they see things that you don't see, and to dismiss them is really to miss it. You don't have to understand 100% of what you hear, but if you can understand 5% or 10%, something connects with you and you dig with them there, then you really can have some great takeaways from these guys, because they're also quick to admit, he admitted on the podcast, like, he's tried and failed a lot of times. I mean, if you're in technology, that's just how it goes. You blow up a lot of rocket ships trying to find one.
Well, and
that
in
works.
entrepreneurship in general, when he started talking about the trough of sorrows, we didn't go down that rabbit hole. I was like, golly, it's so relatable to anyone who has started a small business, and gosh, anyone that's raised kids, anyone that's been married. It's like the trough of sorrows is a real psychological dip from anything that you are working on growth towards.
It's a season you have to expect in anything.
And you don't. And it's amazing how it happens in every area of life, from business to all of it, you name it. Yet you never expect it, and it happens everywhere. And I really felt like that was relatable and something that I will take away from this conversation. Even if I don't think about AI in 30 minutes, I will think of the trough of sorrows.
Yeah. Yeah. He's running fast and moving at 100 miles an hour. And you could see that in the business, and you have to with technology. Like, entrepreneurship is already a high speed stake, and technology just makes that 10 times faster. And you get on one wheel for a second and you can't pull it back out of the ditch. I mean, you're gone. And so I also thought that he did a really good job of explaining some remarkably complex things in simple ways. One of my very favorite quotes is Albert Einstein, that says, if you can't explain something to a 5-year-old, then you don't yet understand it well enough yourself. And I really like that mentality, that there's plenty of complexity there that he could have just talked and lost the whole audience, right? I mean, we wouldn't have understood it, and no one else would have either. And instead, he was intentional to give us the depth that we wanted to go to, but he was still able to bring it to a place that was digestible so that anyone listening to it could learn something. And that's the ultimate objective, is you don't have to get it all, but get something.
Well, and I think even as somebody that uses AI technology in different pockets of my life, and I know you do too, and we're trying to raise the next generation of kids to be smart and think about it, I appreciated the distinctions he made between his company and perhaps other products that are on the market. And I really appreciated his authenticity in talking about the gut check he has to do when he thinks about the ethical application of some of this tech, because it's just sometimes feels downright creepy. It feels like we are living in Orwellian novels, and it's hard to reconcile as a human what to do about that. And there is this distinct desire to kind of put your head in the sand and be like, I don't want to read it. I see people do that a lot around elections. I'm just not going to read the news. I'm not going to pay attention. But like politics and technology, it's like, it's happening.
Yeah.
And it's going to impact you, and we don't have the privilege of putting our heads in the sand. So that's why I was really grateful he came on. He made it digestible. I learned something certainly today. And it just makes me want to continue to look for sources that can digest this material and help me feel like I'm educated and I can at least make choices with some baseline instead of feeling like I'm chasing the car.